Hello and welcome to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group.
Another week and another smiling Sarah Peterson.
Thank you so much. I always love being here with you because you make planning so much fun, and I learn so much every time.
You know, it's interesting. We used to not have the planning part. In 1988, when I came to Arizona, came to Tucson, it was all, I had this idea that no one else had to manage money like institutions do for a fee. And obviously the fee business has taken off tremendously, but think about how early that was in the stages of doing this. And it was all about putting myself on the other side of the table, say, what do I want? What would I want if I was a client? And building the business just like that. And that fee business has taken off. And it does put you on the same side as the client. I don't care what commercial you look at. I don't care who's on top of it or whatever. They always say, well, we want to be on the same side as client. If you make money, we make money. If you don't make money, where they're making the mistake is we still make money, we make less. And it's very misleading that they say we don't make money, because that's not true. They make money, it's just less.
One thing about you that I think is just, well, amongst the many things that is so wonderful is you talk a lot about how you've coached a lot of teams in sports, and I see this mentality in you where you really do encourage people and you love to educate them. And we've talked about this on other shows, but this really should be a bigger part, any part of our formal education, and it's just not. So to be able to provide this through your radio shows, through your television, maybe through a book at some point in time, this is an education we all could use. And to be able to give it to people complimentary is even more amazing. But
well, it stems from the fact you want trust, right? If you want trust, you have to open up to people. And the more people know, the more you make it simple, the more they trust you. And I learned a long time ago, I've done my radio show, the 2-hour show on Sundays for 33 years, right? 33 years. The one thing I remember and understood was when you're talking to people, you got to make them understand what you're saying. So simplify it. And I always talk to people about, like, I simplify it as if I'm talking to someone like in elementary school or junior high or high school, where you got to really simplify it, because the more they hear it, once they understand it, it's not about them thinking you don't know what you're talking about or that's too simple. It's about, oh my God, I trust this guy, even though they don't say it, because he's making me understand what he's doing. Everyone talks about transparency. Most people want to talk above everyone and act like they're smarter than everyone. That comes across by what you're doing, but make sure that they get what you do. And if something's not right, fix it, change it. And people are unwilling to recognize when they can do that.
do you think one of the reasons people don't, pick up the phone and call and get their financial plan started, or one of the reasons they don't want to attack this is because they are intimidated by, bearing their financial cards? Like, what if Dean tells me that I don't have enough money? Or what if Dean tells me that I'm on the right path? Do you feel like there's That's
the number one reason.
Yeah.
People feel they don't have enough money to do a financial plan. Number two, they're intimidated because they don't know. So number three, what do? We make sure they understand. We talk simple to them. Simply, we want them to understand. We don't talk down to them. You don't talk down to people. You wait to do, but you also have to have that innate ability to understand if someone's not getting it and stop and say, Sarah, what are you not understanding? Talk to me. Tell me ask me some questions, because it doesn't seem like I'm explaining it to you. So I'm not getting it. So ask some questions. And it breaks the ice. A lot of people don't want to do that.
What's the biggest mistake you see people making? When someone comes to you that you've never met before, what's like the biggest mistake you see they're making?
Letting the emotions get to them. Markets go down, they panic out, they sell, they don't know what to do, they'll get back in and everything else. They don't realize that nobody looks at the statistics of, okay, if the market's down big 1 year, that stinks, okay? And if it's down 2 years, but what happens after that? They're always looking at the present, not the future.
fear is not the way that we want to run 2023. We're not running with fear. We're running with education. We're running with information.
And then greed. People are greedy. I think people are more upset when they have a stock and they sell it. Okay? They have so much Apple, okay? And it was 180, and I told her that you should sell some of the Apple. It's 80% of your portfolio. Now it always comes back. Well, you know, it got down to about 128, 130. They lost over $1 million, all right? I don't want them to panic out down here because now they don't know what to do. They're not clients of ours. It happens to be my ex-wife, but I still give her advice, okay? But of course, she still doesn't listen to me, but she realizes she should have. And, you know, it wasn't about selling it all. It was about protecting it. And nobody understands protection, what it means. You know, they don't understand that, like when the rate lower in interest rates, because we have the worst economic recession in history after 2008, that they're low in rates and they stayed zero for so long. We have so much liquidity that the markets are going to go higher. Well, now it's the opposite. We're not having quantitative easing anymore. We're actually taking liquidity out, which means there's not enough money to keep the markets to go higher, which means the amount of pricing that goes into it is going to come down.
I want people to know, since we've been talking and we haven't even talked about the elephant in the room, which is the phone number that's on the bottom of the screen. This is for you. This is our gift today for sitting here and listening to Dean and I just chat, which is what we love to do. But give us a call, 844-544-4909. All this is a conversation.
Why do you call that an elephant in the room?
I'm just saying it's sitting there and people
It's
don't know.
not an elephant. It's a phone number. And it's the key to unlock their financial future.
It was a phrase, okay. Give us a call. Let us find out, are you on the right path? Because if you're not, guess what? You really want to know. Don't continue on the wrong road. Get on the right road so that we can make that plan and then we can live the rest of our life.
What's beautiful is they see it. And once they see it, the stress level goes down. Once they hit that going into retirement and distribution phase, they see the plan. They get the checks in the mail. It reduces their stress. Okay, the market goes down this year. They still get their money every single month.
Look, if you're telling me you can take stress off me in 2023, I am in.
Please stay with us. Stress is ever not going to come off you.
We are never going to stop talking. We're going to take a quick commercial break and we'll come back and talk more about how your money matters. Please stay with us.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group. Dean, I'm going to tell you what I want to talk about, okay? I want to talk about change because if I have learned anything in the past couple of years, that change is inevitable, and some of the changes we've experienced in the last few years, nobody could have predicted, right? And I see that that is the trend throughout our entire lives. I can tell you what my plan is, but what do they say? Best laid plans, right? I mean, things are going to change. So in the last few years, I can guarantee you that someone has maybe had healthcare changes or changes in career or job, or maybe lost a spouse, unfortunately. But those things all impact our financial
You
plans.
forgot one other one that's huge right now is divorce. The pandemic has created a lot of divorces.
You know
see it.
why? Because we
Why?
all had to spend time with one another. Got stuck in the same household, so you want to make sure you really like that person. You really got
Good thing we didn't have to go through that.
Yeah, I'm not going through that, honey. No, never. But seriously, you know what? Listen, change is inevitable, and that's why it's so important to understand that these plans are not a set it and forget it.
Well, success, you know what success means? Adaptability. You need to adapt as you go. Otherwise, your plan stinks. Again, I know I bring it back to coaching because that's what I know. I put a plan together, right? It's not working in the first half. You think I go into the locker room and go, we're going to do the same thing in the second half? No. Why we're successful is we changed that plan. They already counted us in the first half. We know what they're doing, so I'm going to change things in the second half, and that gives us the opportunity to be successful. Your financial plan's the same thing. We didn't expect a 20% down market. We don't expect, but we do think that this year might be a little bit more difficult too, so what do? We adapt to that. Once we get through this, we got to adapt back to a more aggressive approach and then be able to make up for these 2 years. In the meantime, we're mitigating risk right now. We're using investments like annuities that you know you can get some upside, but you're not going to have some downside, all right? They're not for everybody. There is a replacement for bonds, a replacement for some growth, depending what you're looking for. But they help you in certain areas. We're using bond ladders. We reduced our risk exposure and put more in fixed income now, because fixed income can give us these bond ladders, which are able to give us 4%, which we'll take right now. You know, there's a lot of different ways that you have to do it. It's adaptability. But you know what so many people do? Old school, just buy it, leave it, and go. And you know what? It doesn't work that way. I remember Bank America was so high, and I had a client that husband passed away, and that grew to about $1.5 million. And I could not get her to sell any of it. This was in 2006 and 7 and 8, okay? Could not sell any of it because it was her husband's. And she lived off the dividends, which was a nice dividend that time. It got under 10, I didn't know what she was going to do. That's what you remember in 2008, everything went down. Bank of America then it becomes part of Merrill Lynch and everything goes down and the dividends went away. She was able to survive because of adaptability, but it just crushed her whole lifestyle. Mm-hmm. It crushed everything, her dreams, everything. So adaptability, allocations, diversification, that's how it gets you through all the good and bad times. But that was greed. And that was probably some too thinking about this, my husband's, I can never get rid of it.
And I was going to say, as much as you want to put it on greed, I think a lot of times in terms of, look, health and wealth, the two most personal things you can deal with somebody, right? And you dealing with people's wealth, it is an emotional thing. I mean, for all of us. And why it's emotional is because we all know the blood, sweat, and tears that went into making each and every dollar that we make. And sometimes people are making decisions based on emotions instead of fact. And that's why it's so nice to have like somebody outside of the emotional realm.
That's the one failure that I look in my life that I wasn't able to ever really talk her into selling off some of that. Okay? It was in a totally separate account. There was no fees based on it. It was just sitting there. And it was working for a long time. And I look at that and I go, I wish I was stronger to tell her she's got to allocate this. You know, take some money off the table, reduce it in half, do something. And
yeah, but you've always
happen.
Talked about how you have, that's why your portfolio has balance, right? So that there's other things that are going to offset the losses in one of those things. Even if we're not all perfect, there's going to be mistakes made along the way. But
and this year, you always look, say 50-50. Everyone says being 50 stocks, 50 bonds, right? This year was something different. And it's always something different. Stocks went down, bonds are supposed to go up because interest rates come down. It didn't. Interest rates went up, so bonds came down, which hurt your bond portfolio. And then on the other side, stocks went down because the earnings were there and interest rates were going up. So you got a double whammy. The NASDAQ stocks, Apple's, Microsoft's, things we have to use every day, Google, right? They got killed 35, 40%. So your portfolios are down. So what do you do now? You stop being emotional, you go see a professional and say what's your game plan going forward. If you're not switching into quality now, when are you going to switch? If you're not mitigating risk to get through this year and setting yourself up for 2023, 2024, 25, 26 to take the ride back up, then you're not going to put yourself in a place of success.
I feel so strongly, like for me personally, 2023, I'm excited for change. I don't really feel like I want to go back to anything over the last few years. I want to move forward, right? And in order to do that, you kind of got to get your house in order.
You know, you're talking about the last 3 years. What's the one thing that most Americans feel about the last 3 years?
Shocked, amazed.
That we've been lied to.
Yeah.
We've been lied. No one knows the truth. And see how uncomfortable we are when we don't know the truth. And that's why I'm saying what we do in our practice with everyone that works for me has to put the client first. We have to be truthful for them. Even if it's a mistake we made, we have to be truthful because transparency is so important. And that's how you build up a great practice.
Well, and you've talked so much about, shouldn't this just be, I mean, shouldn't it be inherent, right? Like, shouldn't you, anyone sitting on the other side of the table from you think, what would be best for this person? And it's not always the way. Well, the government isn't treating us that way. They're not saying what's best for you or what's best for you. So it's nice to have somebody on your side who knows my story, who knows your story, who knows how are we going to make these hopes and dreams come true? Let's make this happen.
Right. And admit when, goes back to again, have a game plan that you can change. Adaptability. It's so important because things are going to change. What is your advisor going to do during those changes?
Dean, if I don't have an advisor, I've never talked to anybody about this before, how do I start? I pick up the phone, I call you, what do I do?
I like them to go to the website first, check us out, listen to us on the radio. I know you listen to us on TV.
You want me to go to your
now.
website? Is that because you have a really good picture of yourself just
No.
smiling away?
No, your picture's not there. You want a picture? We'll put a picture out of you.
No,
I
I'm
need
not
to do
talking
that.
about me.
I got to put you on there now.
No, your
Little- my little
bright
host.
shining face is just enough.
My New York Greek friend. But seriously, it just explains the system. It explains the, where you are in the investment world.
I just think it's nice to take the intimidation factor out
Right.
because, look, it's not easy to talk about these things. We don't all want to talk about these things, but you got to do it. Just like you have to go to the doctor and get your checkups, you got to do this so that you can know where you're at and make a plan, and then you don't have to worry about it anymore.
But you see, once they go to the website too, it says contact us. You just put in your name, it comes to us, we call them. Or they call us. There's so many different ways.
Easy to get to your office.
It's a great office. It's got great parking. And you can go eat at like one of 7 restaurants that are right next door.
Listen, I like how you simplify the process. You give us an education. Who doesn't want an education? If you're not on the right path, wouldn't you want to know? That phone number is 844-544-4909. We always run out of time.
And what do we do when they call?
What do we do?
We give them a free financial plan.
He loves this word, the F word. I like complimentary and custom. I guess I like the C word.
I grew up in New York. You know I like the F word.
You know what you're going to get when you get to talk to Dean, okay? That's all I can say. 844-544-4909. We'll take a quick commercial break. We'll come back and talk more about your money matters.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only. To set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dean Greenberg of Greenberg Financial Group. And I am going to get into my favorite part of the show, which is the viewer questions. They always call with the greatest questions that I think most people probably have and just don't really know how to ask. Or maybe they don't know that they have this question and they do, but it's good questions.
Let's go.
Let's do it. Okay, what exactly is rebalancing a portfolio and is it necessary?
Absolutely 100% necessary. What rebalancing means is it keeps you in line with your risk tolerance. So say you wanted to be 60% invested in risk side, 40% less risk. If the markets go way up, that 60% goes to 70, the other side goes down to 40. You got to sell off some to get back to 60 and buy in at the lower part in the other one. It automatically lets you be selling high and buying low. Rebalancing is very important because we have, especially over the years, they get out of whack and you got to put it back in adjustment.
Or if you've had, like we talked about before, any kind of major life changes, maybe your risk tolerance is going to change. If you went from, working in corporate America to starting your own business, you might not want to be taking as much risk.
Different changes in life, changes of allocation, but that rebalancing, when I think of rebalancing, you're automatically doing it as what your set gets out of whack. You're talking a whole different change in your goals, in your financial plan. That's a change in my plan. I have to reduce my risk, increase my safety because things have changed in my life.
Absolutely. Okay, this is another great question. How do you guard against huge losses like 2008 when recessions hit?
Why are you only saying 2008?
I know.
Okay, and 2020 and 2022.
Because people still, 2008 was just so jarring for so many people.
It was, but it's all about allocation. What is your allocation going into it? What is your risk tolerance, okay? Obviously, if you were 50-50 then, bonds would have worked, all right? So you would have lost half of what you did on the other side, which still was terrible, which was about 25. It would have been 50% or 25, which was still terrible. But it's all about mitigating risk. As we've gone through that, there are new investment vehicles out there and new strategies. We've gotten better over time. I'm always trying to improve, and I'm always trying to teach the people that we have with us. We put together, and this was in 2019, which worked out nicely, we put together what's called a protection model. We actually go out and buy insurance puts against our ETF model. So if it goes down, we could lose. We could lose 10, 12, but no more than 15%. So you're doing it against a catastrophic problem. Going down 20, 30, 40, 50%, you're somewhere about 12 or 15%. You can even go ahead if you're even more fearful. You can even reduce that risk down to more just by buying more insurance puts. But when the markets go higher, that eats into your return on the other side. So you have to balance that again, and you got to take some off when it's going down, and you got to put some more up when it goes higher. The other thing you can do is you can always buy inverse funds. But the whole idea is mitigating risk and understanding the markets, because those would be short-term instruments, because as the markets go down and we go down 7, 8, 10%, usually we're going to have a short-term bottom and rally back up. So you have to be able to know what you're doing. It's not easy, but we know it, we understand it. I've been trading the markets for almost 40 years now. So I try to use these institutional investments on my retail clients, my individual clients.
All right. Let's get on to the next one. This is great. Should investors be concerned with our government's, what is it, $31+ trillion in debt?
Well, we talked about this for the last 4, 5, 6, 10, 12, 20 weeks, okay? Our debt is a horrible situation that we're in, and our government doesn't expect anything but keep handing it out. I'm hoping that this new development that's happened in the Congress, where they said they're going to go back to a 2022 budget, 2022 budget, and any budget increases from there, any debt ceiling raises must be met with cuts in spending. It'll be the first time we've done this in a long time. We need to. What we've just had lately with this 1.7 trillion and the one with the Inflation Act and the one before that, after the inflation, I get it, 5, 6, 7, we had to put a lot of money out. Nobody was working, which was ridiculous. You had to keep the world going. But now, we didn't need this stuff. We didn't need to go from $25 trillion to $31 trillion. We just didn't. We're going to pay the piper. When the piper comes calling, that's the time, after that tumble, you go ahead and adapt, and that's when you're going to make all this money back.
I always try to put a positive spin on things, and I like to think that this was just a few years where we learned a lot of very invaluable lessons, right, of what not to do. And hopefully we don't repeat those same mistakes.
We know it because we look at it in our households. Okay, eggs, you can't even get them, but what are they, $8 a dozen now? I mean, everything has gone up tremendously. Food budgets, I mean.
Somebody came up to me in the grocery store yesterday and said, don't buy eggs, they're $11.
$11.
$11.
That's almost $1 an egg.
It's totally insane. But also, I mean, there was obviously a lot of things that happened in the last few years that we really wish didn't, but we have to learn from it. We can't go backwards, and that's what we're always talking about.
But our government doesn't, no, they don't. What have they done? They just spent. Republicans, Democrats, don't matter. They've all been spending money since the early 2000s.
I think we've learned a hard lesson. Shutting down is not the answer. We all have to keep moving forward. And that's why you and I always say, let's move forward. We can't look backwards. We got to move forward. We make a plan for tomorrow.
Right.
And we don't know what's going to happen tomorrow. So let's try. Let's try and plan today. Because what's tomorrow? Do you know? Do you?
Use yesterday as a stepping stone to move forward. Okay? You can't repeat yesterday. What you can do is change the future.
So why
you
are
can
they
make
watching
it different.
our show?
You can do the right things going forward and be adaptable. That's where we started the show and we ended on the same thing. Be adaptable. Change the game plan if it's not working. Get off that subway car if it didn't go from 20th to 40th because it ain't turning around. Because I promise you, if you know anything about New York, that subway going the other way is going to Brooklyn. You'll be in Williamsboro before you know it. Williamsburg.
What is the point of all of this without having a plan? If you want to take one thing away from this show, if you don't have a plan, we can't tackle all these things. We need to have a plan in place. All you need to do is pick up the phone. It's literally a phone call away. You come on in, you visit with Dean. He's going to tell you you're on the right path or you're not. But don't
I thought you were
want
going
to
to say, just pick up the elephant.
You're never going to let me live that down, are you? Listen, this is probably one of my New York things coming out.
It's all right.
We are always having so much fun, but really the point is like, we don't know what tomorrow's going to bring, so let's take advantage of today.
But you got to plan for it.
Right.
Got to plan for tomorrow, today.
Dean, there's nobody more fun on the other side of this table than you, and I learned so much
pretty
every
damn
time.
fun too.
I hope that you've learned so much, and if you have questions, write them down, call us, email us. We love these questions. We want to know what's on your mind, and we want to know what haven't we talked about so that next time we can talk about it. We hope you'll join us on the next Money Matters, and Dean, thank you as always.
Thank you, Sarah. It's so much fun.
We'll see you soon.